my sentiment towards volatility in the near-term future. Let's move on to the market, SPXL, and see what happened today. We can see that this is the pattern that we were tracking for several months. We have an ascending triangle. We set an A, B, C, D, E. We break out, we retest, and then we run higher. The exact scenario played out exactly how we wanted it to. We make an A, B, C, D, E. We break out, we flagged and retouched this previous resistance line and shot up higher. However, we had a down day today, and let's look at why. For about a week, I was looking for this retest of this previous trend line. We didn't get it. We were about 10 cents away from it. However, this came true and we did run higher, but a secondary supporter here of this being a breakout, a true breakout, is when ascending triangle specifically breaks out, I expect the RSI to come up to overbought regions because we already ran up, from down here all the way up here. It should be overbought. And the psychology right here is that we just want to cool off our indicators, let the technicals kind of settle down a little bit. And an indication of this is our relative strength index. And we can see that play out really nicely here in SPXL. We basically just take, 2 or 3 or 4 days. And I was saying the entire time that if we can touch 50 and hold it, the first time that it starts to turn upwards would be a good entry point. And the exact scenario plays out here in the 30-minute is we just let technicals kind of cool off. And we see that we hold this 50 level very nicely throughout that. And then we move higher. And the first indication of us breaking above 50 is basically a run up from 33.50 to 34.70, which, is pretty good. And from this, I took the move, from Fibonacci, which here's our 0, here's our new 100% ceiling. And I just wanted to look for the resistance zone as price makes its way upwards. And it looks like we're getting stopped out here perfectly at the 141.40 continuation Fibonacci level. And it kind of looks like the exact same scenario is playing out over here in today's price action as it did last week from this kind of measured move consolidation zone. And this is usually pretty good because price should consolidate on its way up. Otherwise, we start getting into things like wedges and whatnot. And I've looked at the technicals, I've looked for divergences and everything, and in all honesty, I cannot really find any for the life of me. The market seems strong. I mean, for the next 2 or 3 days, we might move solid sideways, we might drop, a little bit, but I don't think that any reversal is clearly outlined in the price action or technicals right now. So on the 15-minute, I kind of drew what I saw happening. I drew the price action here that I see. I see an impulse wave here. We do a 1, 2, 3, 4, 5. This is the end of our Elliott wave and therefore should be our ultimate destination. This is coupled with the fact that we have a ascending wedge right here. We see that price makes this very strong support line all the way up, and we run up too fast and we set in this high point, and we cannot run up as fast again when we set up a lower high point, which leads to a lower degree support zone than our resistance zone, which is literally the definition of a ascending wedge. And we can see that price, it gets squeezed up here, it gets too tight for it, and we break down. What have I always said? I said that once we think that we have a pattern in place, we want to look for divergences. First thing that would have tipped me off is we're at the end of our 5th Elliott wave. Therefore, we should be taking profits. Second thing that would have tipped me off is the pattern, the ascending wedge. Third thing that I would have looked at is the Fibonacci level, which was at 141.2. And last but not least, I want to look for that divergence that I see, and I actually spotted one. We've got a hidden divergence right here. We've got a equal low on much higher prices. So the stochastic comes all the way down here, and then we hold it for a long period of time. You wouldn't have seen this all the way until we make this new low right about here, right when we break out of this ascending wedge. And this is a divergence because price moves significantly higher while our stochastic makes an equal low. And we can see this kind of play out right here. And price has been moving sideways ever since. So like I said, since this is a wedge, I'm going to be looking to buy some SPXL if it drops. However, I'm out of this ETF right now. I don't want to buy highs, I want to buy lows. So a couple things that I could see playing out in the near-term future is I could see us doing exactly what we did last week and just moving sideways, letting our technicals cool off and waiting for the RSI to hit 50 before we start looking at a position. And if that's the case, I can see us moving down to the 78.6 level, which is not much of a move down. However, if we are not exactly the same as last week, I could see us moving down. Next support level would be 61.8, and beyond that 50 is not significant at all because it doesn't have any consolidation right here. So if we break below 61.8, we'd be going to 38.2, in which case this was our previous high, our previous resistance zone. And if we break through resistance, resistance becomes support, and I would be looking to enter a position here if we do end up falling down to about $34. So that's my analysis for the overall market. SPXL, bull 3x shares. Short term, I guess I'm neutral. I don't know whether price is just going to cool off the technical indicators or if it's going to be slightly more bearish and move down to $34, in which case I'm going to be interested in taking a position. But in the medium term, I think that we have a clear indication of a breakout of the larger pattern going on, and in the long-term time frame, it's very hard to build a case for the bearish situation right now. So short-term neutral, medium-term neutral to bullish, and long-term bullish. All right, let's look at natural gas.